How can you determine the value of an old coin? Could the coins left to you by a relative really be worth thousands of dollars? And if you started with a penny and doubled the amount each day for a month, how much would you have? We'll answer these questions and more on this, the 47th episode of the DoughRoller Podcast.
Welcome to the DoughRoller Podcast, where the best thing money can buy is financial freedom. We help you make more, spend less, and invest the rest. And now your host, Rob Berger.
Whether you're just starting out, buried under a mountain of debt, or well on your way to financial freedom, this is the podcast to help you take your finances to the next level. Hey everybody, it's Rob Berger, and it's the 47th episode of the DoughRoller Podcast. We've got it packed full of, I think, some stuff that you'll find very interesting. Actually, I'm going to finally get around to a question that a reader asked me, goodness, a couple of months ago. I got an email, and actually, I think it was even before I started the podcast, and it was, how do you value a coin collection? Are there any tips or tricks or tools to help you figure out how much an old coin is worth? And so we're going to cover that today, and it actually kind of dovetailed with an email I got from my good friend Jay Money over at Budgets Are Sexy. And he is a coin collector, it turns out, and he started a blog about coins, and he and I exchanged some emails. And he actually had written an article on Budgets Are Sexy that got my attention about compounding, and that's actually going to be our money tool of the day, compounding. And it's perfect, I think a perfect fit for coin collecting. And a great article that Jay wrote, and it was this: if you start with a penny on day one and you double it every day until the end of the month, so you'd start on day one with a penny, you double it, I guess, 30 times until day 31. How much would you have? I'll give you a second to think about that. Let's kind of walk this through. So day one, you'd have a penny, and then 2 pennies, 4, 8, 16, 32. So I guess at the end of 1 week, you'd have still less than $1, 64 cents. Not very exciting. What do you think you'd have at the end of a month? You've doubled your money 30 times, all the way to day 31. Any ideas? Well, in his article, which I'll link to, he actually does the calculations for you as a way to show you the power of compounding. As you know, I'm a big fan of Excel, right? So how can we figure this out? Well, it's real easy, right? We want to figure out the future value. If we start with a penny and double it for 30 days to day 31, how much would we have? So in Excel, you could figure this out easily. Just go to the function box. You type in equals FV for future value, open parentheses. And what's our interest rate? Well, normally you put in something like 0.08 if you want 8%, right? We're doubling our money 100%, so that'll just be a 1. So you'd have equal FV, open paren 1, comma, and we're going to, how many periods? Well, we're going to double it. We're going to start on day one with a penny, and then we're going to double it 30 times until day 31, so the number of periods will be 30. And then you have a comma, and the payments. Well, we're not going to add to this. We're just going to start with a penny. We're going to double it, but we're not going to be adding more capital. So the payment actually will be 0, and a comma, and then the present value. Well, day one, present value is a penny, so 0.01, and all we do is hit enter in Excel, and we get the number. I've given you plenty of time to think about this. What do you think? Think it's over 100,000? How about over 1 million? You start with a penny, you double it every day for 30 days until day 31, you end up with over $10 million. Amazing, but true. And as I said, Jay Money had a great post on this on Budgets Are Sexy. I'll link to it. And it really shows you the power of compounding, and something that we talk a lot about here. And you need 3 things to harness the power of compounding, right? It's not enough to know that over time compounding can generate a lot of wealth. You got to actually harness that power. How do you do it? Well, you need 3 things. You need time, right? That's probably the most important factor. And so how do you harness time? Well, simple. You start investing now. Obviously, if you start when you're 20, you've got more time than if you start when you're 50. But for those that are 50 or 60 and say, I'm out of time. No, you're not. You're never out of time. Well, eventually we're all out of time. But until that day, you can start investing. And if you say, well, I'm 50, how much time do I have? Well, you've got more time than you'll have when you're 55. It reminds me of my mom when she was talking about going back to school, and she was in her 40s, and she said, Rob, I'm too old to go back to college. I think she was 45. I said, Mom, God willing, someday you're going to turn 50, and you're either going to turn 50 with a college degree or without a college degree. The choice is yours. She went back to school, got her degree in education, and taught for 20 years, English as a second language. Anyway, I don't mean to go off on that. The point is, I don't think it's ever too late. Time is the first thing you need to harness the power of compounding. The second thing you want is growth. You want a high rate of return. We've talked a lot about asset allocation in these podcasts and investing, but generally that's why stocks are better than bonds. Now, there's a place for bonds in I think most portfolios, so I don't mean to suggest that you should abandon your bond investing and have all your investments in stock or stock mutual funds, but that is where the growth will occur, and it's why, at least for my portfolio, I have about 80% in stocks and 20% in bonds. So you need time, you need a good rate of return. We're not going to double our pennies every day, like J Money's example. That's for sure. Wish we could, right? But it's a huge difference between earning 6% a year and 7%. Or earning 7% and 8%. That's why costs matter so much. What seems like a small difference in the rate of return makes a huge difference over time, given the power of compounding. So you need time, you need growth, and the third thing, of course, you need capital. You need money to invest. That's why we talk about spending less than you make and investing the difference. The thing is you can invest a relatively small amount of capital if given enough time and a decent return. It'll generate a lot of money. So that's how you harness the power of compounding: time, good growth rate, and capital. All right, that's the money tool of the day. Frankly, probably the most powerful tool I'll ever talk about on this podcast: compounding. All right, so let's get to valuing a coin collection. So I am a bit of a coin collector. I can't say that I'm have tremendous experience. I've kind of just started. I have a handful of coins, mainly Morgan silver dollars, nothing particularly valuable. I tend to pay about $40 or $50 for a nice coin. So not a particularly valuable coin collection, but I enjoy collecting them. I'm looking now at a Morgan silver dollar from 1878. It's an S Mint, so San Francisco. And it just amazes me. This is a fairly high grade, and we'll talk about grade of coins in a minute, but this is an MS 65, Mint State 65. If you were to look at it, it's a very shiny coin. It's in a case. If you didn't know better, some might think it's a proof coin. It's not. Proofs actually, coins are actually struck differently than coins for circulation, but it's a great looking coin. Think 1878. I mean, this coin is 130, 140 years old, and just the history behind this coin. And what it's, you can imagine if it could tell stories, the stories it would tell. And that's why I enjoy coin collecting. It's not so much that these are particularly valuable coins. It's kind of amazing to me, though, that you can get a coin like this in such a good quality. It's such an old coin, and it's really not that much money. We'll talk about values, obviously, and how you can calculate it. But the other thing I like to collect are currency notes. I don't have many. In fact, I've got 2 so far, so I'm kind of at the beginning stages of this. But I love national bank notes. And if you don't know what a national bank note is that back in the day, chartered national banks could issue their own currency, and there were rules they had to follow. They had to have treasury securities that they put on, send to the treasury to sort of back their currency. But they could issue their own currency. The one I'm looking at now is from the Huntington National Bank of Columbus, Ohio, and it dates back to the early 1900s. And of course, if you know anything about currency and U.S. notes, before 1929, our currency was notably larger than it is today. And so when I first looked at notes like this, it almost looked like play money. It doesn't even look real almost because of the size of it. They eventually reduced the size of currency to what we are used to today in 1929 for a somewhat obvious reason, and that was to save on costs of printing. You use less paper if you have a smaller note. But when I look at these old notes, they're kind of funny to look at just because of the size. It takes some getting used to. But even this note, which again is over 100 years old, and a pretty good condition. It's rated a 25, which is considered very fine. It's not a particularly expensive or valuable note because it's so common. But that's sort of my background. It's very much a hobby for me. I enjoy it. I go to some coin shows now and again, but I have a very small collection that's not very valuable. But I don't do it for the value per se. I don't view my coins and currency as an investment because they don't have any way to generate income. That to me is sort of the definition of an investment, something you can invest in that generates income. And coin collections and currency collections, I think they're fun, and it's possible I could hold them long enough and maybe sell, a $50 coin for $75 and make some money. But that all hinges on what people are willing to pay for it. And that's what we're going to talk about today. You get a coin collection. Maybe you've inherited some coins, or a family member has passed some coins down to you. It seems like just about every family has coins somewhere in a cigar box, a shoe box, somewhere in the house. You've got some old coins, and you may be wondering, what are they worth? So I'm going to walk through 7 sort of tips, if you will, to help you figure out what a coin or coin collection might be worth, including how you might sell them as well. So step 1 is you've really got to know what you have. What is the coin or coins that you're looking at? And this may not be quite as easy as you might think. Certainly, you want to know the type of coin. In my example, I'm looking at, again, a Morgan silver dollar. So that's step 1, but you got to go beyond the surface, because there are certain things about a coin that can really affect its value. For example, of course, the year. Some years in any given coin, whether again it's a Morgan silver dollar or a wheat penny or a buffalo nickel, and the list could go on, there are certain key dates that are more valuable than others. Now, this is a 1878 Morgan silver dollar, and the question is, well, is that a particularly valuable year? And you can find that out in a couple of different ways. The first one is just to search on the internet. If you search for key dates for Morgan silver dollars, for example, key dates, and I'm actually doing this search as I record this podcast, key dates Morgan silver dollars, you'll find plenty of resources that will tell you what the key dates are. And I'm looking at a number of options here on the internet, and it'll list the key dates. Very easy to find once you know what coin you're looking at. Again, you could do the same thing for a wheat penny or whatever, but you'll want to know what the key dates are, and that's important. But the other thing you want to know is the mint, where it's minted, because sometimes you might have a key date, but only for a specific mint. So it might be a key date, but only if it was minted in Denver, for example, or in San Francisco. Most people, by the way, are familiar with the 3 big locations: Philadelphia, right, Denver, and San Francisco. But you may not know that those aren't the only locations where coins were minted in the U.S. And I know this from my study of Morgan silver dollars. You also have an O, which stands for New Orleans, and a CC for Carson City. So there are other mints beyond perhaps those that are more common. And so when you're looking at the date of a coin, you need to think of it in terms of both the date and the mint. And so you might have a coin that the difference in value can literally be tens or even hundreds of thousands of dollars for the same coin with the same date, but a different mint. And you say, well, why would that be? Well, it's just demand, right? There are some coins that are harder to find, either because a lot of them weren't minted, so the number of coins that were minted will vary from date to date, from type to type, and from mint to mint. And there may be some date mint combinations where there just weren't a lot made. Or in some cases, maybe there were, but there just aren't a lot available. They're gone. And or in some cases, maybe there weren't a lot of minted, but most of them are still available, and that can hurt the price. So you want to understand the date and the mint, and whether or not that is a key date. So that's the first thing. You want to understand what you have. And I guess before I move on to point 2, I should say this too. Something that I've learned is that there are small things in coins, particularly if you're not into investing, you don't know a lot about coins. There can be small details about a coin that can change its value dramatically. There can be certain known errors for example, in the minting of a coin that can change its value dramatically. And these, it's unbelievable to me the amount of effort that's gone into and the hard work that's gone into understanding, particularly with U.S. coins, the history of them, and what errors and peculiarities of certain dates and mints of a coin that can change its value. And so sometimes, for example, you'll have coins where there are a few of them where the date of the coin is actually stamped over top of another date. And you can see that. Sometimes it takes a magnifying glass. And you think, well, really? That changes the value? Oh, it can have a huge impact. And so you'll want to understand that for the coin you're looking at. And the same is true with currency. I'm looking at the national banknote that I'm holding, and as I mentioned, I think earlier, it's not a particularly valuable one, very common note. But there are certain things about certain national banknotes that can change the value that you might not be aware of. For example, for national banknotes, the bank prints a serial number on the note. And of course, it starts with number 1 and goes up. Now, the note I'm looking at has a bank serial number of 135,149. Again, not a particularly valuable note. But if this were a serial number of 1, it would be tremendously valuable. Just that serial number change can make a huge difference. And there are national banknotes. I don't have any, but there are national banknotes with a serial number of 1 in pristine condition that are worth hundreds of thousands of dollars. But again, you may come upon that. I mean, congratulations to you if you did. But it's important to understand what you've got, not only in terms of type and mint and date, but if there is any aspects of this coin that make it particularly valuable. Now, you might be saying, okay, but how can I study all of that? Well, I'll come to that in a minute, because there's a lot of details. You say, I'm not an expert in coins. Where can I go to get some help? I'll come to that in a minute, but let me go to point number 2 first, and that is, it's not just about the type of coin, where it was minted, the date, key dates. It's also about its quality, its grade. What kind of condition is it in? And there are services that will grade coins for you. In fact, the coins that I have all been graded, and there is a certain scale, if you will. And it's usually just a number system up to, I guess, proof would be, I think, really 70, although proof really isn't a grade. It's more how it's struck. But MS grades, mint state grades, are in the 60s. So a grade of 60 or higher is pretty good. But again, it depends on the other factors as well. In some cases, a grade of 60, for example, could be extraordinary for the type of coin, the date, and the mint. In other cases, like the Morgan silver dollar I'm holding from 1878, it's a MS65. That's a very high grade, but for this particular coin, for this year, for this mint, really quite common. But you need to know the grade of the coin. You say, well, how am I going to find out that? Well, what I would do, there's a couple of things you could do. You could have the coin graded, but probably, unless you know you're dealing with a very valuable collection, that's probably not the first step I would take because it's expensive. So what I would do, I would take it to a couple of dealers. I would find local coin dealers and take your coins in and get their opinion. I'd get opinions from a couple of different coin dealers, particularly if you think you might have a somewhat valuable collection. Now, when you do that, the first question you have to ask is, am I dealing with someone who's trustworthy? And that's an assessment you're going to have to make. Obviously, I think it helps if you deal with an established coin dealer that's been in the business for a very long time. One thing that I've found, and I've gone to a number of coin dealers and coin shows, is that I've had very good experience with dealing with coin dealers. It's almost as if there's an unwritten rule in the business that your reputation is critical. And, I found dealers, one, to be very helpful. They will sit there and talk your ear off about these coins. They love talking about coins and currency, and they will give you a ton of information about the coins that you have. And I've found them to be very upfront and very honest. Now, again, I think you always need to have your guard up. That's why I would suggest going to more than one with your coin or coin collection, to talk to them about what you have. I think that's very, very important. And if you can happen to go to a coin show, there's one in Baltimore. Usually, I think a couple times a year. That's the one I go to. It's just huge. And if you were able to go to a place like that and they're free, You could take a coin or two or whatever you have, and you could get a lot of opinions very, very quickly from a lot of very experienced coin dealers. So that's what I would do. Now, I mentioned that you can get coins graded. Again, the problem with that is that it's expensive, and you might want to have an understanding of what you've got before you do. But if you just search in Google for coin grading, you'll find a couple. PCGS is one that grades coins. The coin I've got here was graded by NGC. These are various. PCGS stands for Professional Coin Grading Service. So that is an option. But again, this is going to be add some cost, and it may just not be worth it. You may want to have an understanding of what you're dealing with first before you go down that road. I will say that I think graded coins do tend to sell for more than other coins of similar quality, simply because you have that sort of official, unbiased grade from someone like PCGS. But again, I would start with dealers first or coin show before I went to the trouble and the cost and time of having a coin or coins graded. Now, once you have that, though, once you have a sense as to what you have and a sense of the grade, and by the way, dealers are great at giving you a rough idea of the grade. I mean, if they're experienced dealers who've been in the business a long time, they will be able to give you a rough idea of the grade of the coin. And so then how do you turn that into a value? Well, again, you can start with the dealer. They have what's called the gray sheets. These are the Coin Dealer newsletter, CDN. And they call them the gray sheets because, well, they're printed on gray paper. And these provide the bid and ask prices of U.S. coins and mint sets. And you can look up just about any U.S. coin. I think they're all there. I mean, I'm trying to think if I've ever not been able to find a coin. I don't think so. And they will give you the bid and ask price. That is to say, what a dealer will pay for the coin and what a dealer will sell that coin for. And just like stocks or ETFs, there is a bid and ask price on coins. Obviously, the dealer has to make some money and pay for the expense of running their business and obviously a profit. And they do that through the bid and ask spread. So, what you'll be able to get for your coin will be something obviously less than what the dealer would sell it for. But these figures are in the gray sheets. And so you can start there when you're at the dealer, if you head there, to get a sense as to what a coin might be worth. That's one option. But let's go to tip number 4. Believe it or not, you can go to eBay. A ton of coins and currency are sold on eBay. Now, I've never sold any coins or currency on eBay, but I have bought some on eBay. A lot of coin dealers sell some of their inventory on eBay. And the great thing about eBay, we're all familiar with it, of course, but it's easy to search for coins or currency on eBay. And you can look at, of course, what's being sold at the moment and what kind of prices they're looking to get and how the auctions are doing. But you can also look at past auctions as well. And I find it just to be a great way to get an idea of the value of a coin. And just as an example, I'm typing this in as I talk, so I'm not quite sure what I'll get, but I'm going to type in the coin that I've got in front of me. And I'm even going to type in the grade. So I'm in eBay, and I'm typing in 1878 S for the mint, Morgan silver dollar, MS65. And again, I don't know. I'm kind of doing this live here, so I'm not quite sure what I'm going to get. But here you go. Here's a number of coins, exactly what I've got on sale on eBay. Now, it's interesting. I'm looking at these. Actually, the coin's gone up in value, at least according to what's on eBay. We don't have any buyers yet, right? So you got to have a full transaction. But it looks like it's coming in around the $300 mark. So maybe I've made a little money on this coin because I know I didn't pay anywhere near that. But I'm seeing this is exactly the coin I have, an 1878 S Morgan dollar MS65. In fact, it even tells you who graded it. And many of them are graded in GC, just like mine. And so there you go. May have to sell this thing and take the missus out for a nice dinner. Anyway, check out eBay. Again, you want to do all of this with sort of a grain of salt. I mean, just because something's listed on eBay for a certain amount doesn't mean that's what it's worth. And so oftentimes looking at completed transactions, or the other thing you can do is follow the auctions of the coins that are identical to what you have, and just follow them. You can do that easily on eBay. You can watch, an auction and track what it sells for. So that's one great way to get an idea of price. Another one that you may not have heard about is heritage auctions. Heritage Auctions, and the website is ha.com. It's an auction house that auctions everything, not just coins and currency, everything. But they have auctioned a ton of coins and currency. And if you become a member, and it's free, just sign up, you can get great information about past auctions and what the coin or the currency sold for. It's kind of like eBay, but this is, now a site that's dedicated to collectibles and auctioning collectibles, and a ton of history with coins and currency. Now, I will caution you about one thing with heritage auctions, and I have purchased a couple of coins. My collection is very, very small. I think I have 10 Morgan silver dollars or something like that. So I'm still very new to this, but I have bought one or two of them from Heritage. Their bid and ask price is really large. The fee they take between what someone pays and what the seller receives, I think, is really significant. And so that's something to keep in mind, particularly if you want to sell your coins. I'm not suggesting that Heritage is not the best option for you, because what you get for that spread is an auction house with a lot of credibility, a lot of history selling coins. But I do throw that out there. But in terms of researching the value of coins and currency, or for that matter, any collectible, comic books, old books, art, antiques, Heritage Auctions is a great resource. And I've used it to look at old coins and currency, and I could just spend hours on that site. It's a great way to figure out what maybe coins or currency that you have is worth. So give that a try. Tip number 6 is this. There are specialty databases that are out there that can give you an idea of the value of coins or currency. The one I'm most familiar with relates to national banknotes. And the database is called, and I'm pulling it up right now, but it's the National Banknote Census. And there's a sort of a history behind this database. But, national banknotes, as I mentioned, are issued by, or were issued by, chartered national banks. And that's one of the things that makes them so much fun to collect, is that you can collect them from your hometown or your home state, and there's just sort of a sense of pride there. Like, of course, I'm from Ohio, so I focus on, again, I've only got 2, so I'm just starting, but I focus on national banknotes from Ohio, and as I said, I buy very inexpensive ones because it's I like to put my money in stocks and the market rather than paper that doesn't generate income. It's just a hobby for me, so I stick with the with the inexpensive notes. But it's fun to invest in notes from my hometown and my home state, and that's, I think, one of the appeals for national banknotes. So for the census database. What they look at is, they'll have information on the size of the town and the bank, and they have detailed information about how many notes of different denominations each bank issued during this period. I think I may have this wrong. I think national banknotes, they stopped issuing them in the 30s, I think. They began in the 1800s, and I think they stopped in the 30s. But they have detailed information about how many notes by denomination each chartered bank issued. One of the things they do with that is to try to figure out the value of notes based on how rare they are. But you can log in, and there is a fee for this one, and I do have an annual membership. But they will show you transactions and the purchase and sale of national banknotes. So you can actually, I mentioned there's a serial number on each banknote, and there's a federal bank charter number. The one I'm looking at is the Huntington National Bank charter number 7745. I have the serial number of this note, 135149. I can actually look this note up in the National Banknote Census, and if it's in there, and most of them are, it's rare that I find one that's not, most of them are, I can see its history. I can see when it was bought and sold, sometimes going back decades, and of course how much it was sold for. So this is the database I'm familiar with, but there are plenty of specialty databases where you can get more information about the value of coins and currency. So depending on what you have, what coins or currency you have, see if there are any specialty databases that track the purchase and sale of those items. It might help you give you more information about their value. Again, I would start with eBay and Heritage, but if a specialty database is available to you, like it is with national banknotes, that may be a good thing to try. Okay, the last thing I want to say on value in a coin collection isn't actually directly related to determining the value of your coins or currency, but rather maintaining that value, and that is this: keep your coin collection safe. So many times I'll see someone will bring out their coins and they're in a shoebox and they're just all thrown in there, clanking together, nicking up, coins hitting each other. You get coin marks on the coins, and that will devalue the coins. So I would highly recommend keeping your coin collection safe. You may not at the moment have all your coins in containers, but I would certainly separate them from one another if you think they have some value. Until you can have them assessed, or you assess them yourself, and put them in a safe place. You don't want the value of these coins diminished because they weren't properly maintained. Now, if you get them graded, again, they actually put them in a sealed case. It's great for displaying the coins, looking at them, but it also keeps them safe. The same is true with currency. They grade currency. And when they do that, they put them in, I'm sure there's a name for this, I don't know it, but it's basically just a sort of a somewhat rigid plastic holder. And they seal it, and it shows the grade and who graded it. The particular national banknote I'm looking at is the paper money guarantee. They graded it, PMG. They graded it 25, very fine, which is a perfectly good grade. I mean, it's not anything spectacular. It's not a mint steak type grade. But it's a good-looking note. But the thing is it's protected. It's in this sleeve, if you will, this kind of plastic case. It's sealed. It's obviously separate from other coins or currency, and it's a great way to keep it safe. But if you don't have that, if you haven't had the coins or currency graded, do keep them separated from one another and in a safe condition so that you don't accidentally devalue the coin. So there you go. That's my take on how to value a coin collection, with some resources that you can use to figure out the value of perhaps some coins or currency that you have. Okay, so the money tip of the day is this: read Warren Buffett's letters to Berkshire Hathaway shareholders. As you know, I'm a big fan of Warren Buffett. I think he's, even if you don't invest in Berkshire Hathaway stock, I think you can just learn a ton from the letters he has written over the years to shareholders. There's actually a book on Amazon where you can buy the full collection, although you can get them for free online, and I'll leave a link in the show notes. But if you just Google, Warren Buffett's letters to shareholders, you'll go right to the website. And I want to give you 5 reasons why I think you ought to read his letters. One, they're really funny, believe it or not. He is just a genius at simplifying complicated ideas. And oftentimes he does it with humor. And they're very enjoyable to read. He's just really a brilliant communicator. And he has simplified investing, very complicated investing topics for me, where I've read one of his letters, and I thought, oh, okay, now I get it. And they're funny. They're just funny. And I'll just give you an example. I'm actually working on an article for my weekly contribution to Forbes. It will actually probably be published before this podcast goes live, but I'm writing an article about his 2013 letter to shareholders. And one of the things he says, he was talking about two investments that he made in some real estate many years ago. He said, "With my 2 small investments, I thought only of what the properties would produce and cared not at all about their daily valuations. Games are won by players who focus on the playing field, not by those whose eyes are glued to the scoreboard. If you can enjoy Saturdays and Sundays without looking at stock prices, give it a try on weekdays." And it's just his sort of homespun humor and advice, yet it's packed with so much powerful insight. We're so focused on the market and what it's doing day to day. And if Warren Buffett stands for anything, it's this, that the daily valuations in the market shouldn't affect your investing. Sure, if the market goes down enough and there are a lot of good deals because stock prices are low, you're going to buy. And maybe if the prices go up high, eventually you might sell because people are just paying crazy valuations. But day to day, we shouldn't be focused on the market. And he just has a way of communicating that in what I think is a very enjoyable and powerful way. And so I think you'll see that if you read his letters. They're just funny and insightful in a way that I think is very uncommon. Second reason, he talks a lot, believe it or not, about asset allocation and low-cost investing. It may seem a little odd. He's obviously the head of Berkshire Hathaway, and so why would he be talking about mutual funds and asset allocation and low costs? But he's made it clear that he thinks for the vast majority of investors, you should not be picking stocks. You should be investing in low-cost index funds. And that's what I do. I do have some individual stocks because I just can't help myself and I enjoy it, but the vast majority of our investments are in low-cost index funds. And he actually, in his current letter to shareholders, talked about an asset allocation that he would recommend, believe it or not, including specific funds and how much he'd invest in stock mutual funds versus bond mutual funds. And if you're curious what he would do, just check out podcast 41. That's DoughRoller.net/podcast 41. And you can listen to that podcast, which covers what he said about asset allocation and low-cost investing. But that's not the first time he's talked about it. If you go back into older letters, you see the same thing. I think very insightful. The third thing that I like so much about his letters is he really talks about valuing businesses and about why you should, when you invest in stocks, you should be investing as if you were an owner of the business, not just someone buying and trading shares with the click of a mouse. And he talks a lot about intrinsic value versus book value versus the market value. Intrinsic value, what is the sort of underlying value of the company? Forget what the market is right now. Forget what the stock price is. What is the underlying value of this company? If you were going to buy the company whole, how much would you be willing to pay and why? What kind of cash flows can you expect in the future? And how does that compare to the book value of the company? And he does this in ways that just are incredibly easy to understand. I think it's a great lesson in business in general and investing. I think even if you're a mutual fund investor, you don't ever plan to buy individual stocks. Reading his letters gives you a better appreciation for the stock market and the mutual funds that you own. I think so often it's easy to look at this as almost like a game. Like there's no method to the madness. The market goes up, it goes down. Who knows what it's going to do? But the reality is that over the long term, the market does follow the value of stocks. It can be wildly high in one period and wildly low in another. But over the long term, there really is a method to the madness, and he describes that quite well in his letters. I think that makes it worth reading. And by the way, the idea of investing like a business owner, if you want to know more about that, I talked about it, podcast 23. That's DoughRoller.net/podcast 23. Okay. Fourth reason you should read the letters that he writes to the shareholders. He actually makes accounting fun. I know that may sound strange. He talks about EBITDA. Earnings before interest, taxes, depreciation, and amortization. You may be scratching your head and saying, well, what is that? Well, maybe that's for another podcast, but if you want to find out, read his letters to his shareholders. He talks about them. He talks about the float. In insurance companies, Geico is one, of course, an auto insurance company owned by Berkshire Hathaway. They take in premiums from their customers, right? And they hold on to them. And then eventually, it could be a year later, 5 years later, 10 years later, they have to pay out on claims, right? Well, what do they do with the money until then? Well, they invest it. And that money that they're holding, waiting to pay out claims in the future, is called the float. Well, how much money does Berkshire have in float? How much money has it received in insurance premiums that they're holding right now that they know they'll have to pay out someday? They don't know when. They don't know exactly how much. How much is that? Is it a lot of money? Yeah. $77 billion with a B, $77 billion at Berkshire Hathaway. And what does Warren do with that? Well, he invests it and makes a fortune. And he talks about the value of the float and how it's recorded on the balance sheet because of the accounting standards, but what its true value is. He talks about dividends, dividend-paying stocks. Berkshire invests in a lot of dividend-paying stocks, Coca-Cola, IBM, American Express, Wells Fargo. Those are huge investments owned by Berkshire Hathaway. All of them pay dividends. But guess what? Berkshire Hathaway doesn't pay dividends at all, and he's not going to. Well, in his 2012 letter to shareholders, that was the one a year ago, he has an excellent section on dividends and their value and the problems with dividends and why Berkshire doesn't pay a dividend, but why they invest in stocks that do. Dividend investing has gotten a lot of press recently, particularly with the low yields on bonds. I highly recommend that letter, 2012. There's a section on dividends. You don't want to miss it. All right, the fifth and final reason is I think the history of Berkshire Hathaway shows you the power of compounding. That's right. We bring it back to the money tool of the day. When you look at the returns that Berkshire Hathaway has generated, and in every letter at the very beginning, he walks through the change in book value of Berkshire Hathaway and how it's compounded over the years, it is stunning. It is a real-life example of the power of compounding. And I think that alone makes his letters to the shareholders worth a read. I highly recommend it. Well, there you go. I hope you enjoyed the show. As always, if you have any questions at all, shoot me an email, dr@DoughRoller.net. I read every email. I respond to every email. It may take me a few days. Sometimes there's craziness going on here at DoughRoller headquarters. And I've even had some readers ping me back and say, hey, Rob, I emailed you a couple of days ago. I haven't heard from you. Feel free to ping me if I miss you. But I do read every email and I respond to every email. In fact, as I say that now, I'm thinking of one email I owe a response to. So as soon as I finish this up, I'm going to get to my email and do that. But love to get your questions. As always, you can get the show notes. Just go to DoughRoller.net/podcast 47. You'll have the show notes to this episode along with resources that I've mentioned. And I mentioned that I write an article for Forbes every week. And you may be saying, well, how can you get that? Well, I include links to articles I write in Forbes. I also write for U.S. News. I write for Huffington Post. I include links to those articles in my weekly newsletter that goes out on Saturdays. So if you sign up for that, you'll get links to all of those articles. It's a free newsletter, and you can sign up for that. Just go to DoughRoller.net/newsletter. So there you go. Hope you enjoyed the show. Until next time, remember, the best thing money can buy is financial freedom.